This is MacroVoices, the free weekly financial podcast targeting professional finance, high net worth individuals, family offices, and other sophisticated investors. MacroVoices is all about the brightest minds in the world of finance and macroeconomics telling it like it is, bullish or bearish, no holds barred. Now, here are your hosts, Eric Townsend and Patrick Ceresna.
Eric, it was great to have Anas back on the show. Interesting take on oil production cuts and the outlook for energy prices. Listeners, you'll find the download link for the post-game trade of the week in your Research Roundup email. If you don't have a Research Roundup email, that means you have not yet registered at MacroVoices.com. Just go to our homepage, MacroVoices.com, and click on the red button over Anas's picture saying looking for the downloads.
Folks, because of my international travel schedule, we're keeping this week's post-game segment short and focused. So we're going to skip our usual post-game chart deck, but only for this week. Patrick, we've had some great feedback on the new segment that we aired for the first time last week, the Big Picture Trading Trade of the Week. So let's keep that momentum going this week. Patrick, tell our listeners how you'd put a trade on to express Anas's views on the oil markets going into year-end.
So Eric, my takeaway from Anas's market view is that he's medium-term bullish on oil, but he also expects short-term volatility. If Anas is right and demand growth turns out stronger than expected while supply stays tighter than markets anticipate, then any short-term pullbacks in oil are likely to quickly mean revert back towards the current fair value zone where prices have been trading. So what trade do I think of where the downside risk is manageable and the short-term outlook is not immediately bullish? For me, this is a perfect candidate for income writing on the futures. On page 2 of the Trade of the Week download, I've included an oil chart with the volume profile to help define the fair value zone for the year. What stands out is that the majority of the volume traded has been contained within the $60 to $70 range, with the intraday lows of the year occurring during the Liberation Day volatility down near $55 a barrel. On page 3, I've also highlighted the crude oil futures term structure, which shows an uncommon setup. We currently have the natural backwardation going into next year, but further out into the end of the decade, oil prices are trading above spot prices. To me, this aligns closely with Anas's longer-term bullish view, suggesting that while short-term volatility is likely, the broader trend continues to support higher prices over time. While one could take a more aggressive approach to selling puts in the low 60s to capture larger premiums based on the fair value zone, I'm taking a more conservative stance. Personally, I'm attracted to selling puts further out into the end of the year where my break-even would be closer to the year-to-date lows near the $55 to $57 range. On page 4 of the Trade of the Week download, I've highlighted the $57 strike on the January 2026 crude oil futures chart. Then on page 5, I've included a snapshot of the December 16th, 2025 crude oil options chain, also highlighting that $57 option strike for the put. Now, at the time of recording, the 3-month 96-day put is bidding around $1.82. That works out to a little over a 3% premium on the notional assignment value, which translates to an annualized return of roughly 12% for an unleveraged cash-secured put right. Now, for our more risk-seeking listeners, you can also leverage this trade. This put generates roughly $1,800 in premium per contract while requiring only about $3,000 in margin to carry the position. This clearly implies that leveraged traders can amplify the percentage returns, but that naturally comes with higher risk if crude oil trades below the $57 strike.
That was a great explanation for our professional audience. Now, we don't have time to delve into all the details of a retail version of that trade, but how about just the quick 10-second overview for our retail audience?
Well, retail investors that agree with Anas's view on oil and want to express the trade without using futures, you can use ETFs like the United States Oil Fund or express the trade on highly correlated energy companies for doing similar style income rights.
Now, Patrick, you did a live webinar on Monday explaining your trade ideas on Jim Bianco's rates call from last week's show. How about you do that again, since I'm sure a lot of listeners would also like to hear a more complete explanation for this week's Big Picture Trading Trade of the Week.
On Monday, September 15th, on our members webinar, I'm going to walk through exactly how retail investors can set up oil and energy stock trades to take advantage of ANASA's oil market outlook with no futures required. If you're a MacroVoices listener and want to see how it's done, you can jump on for free. Just register for a free trial at bigpicturetrading.com. No credit card is required to try it out.
Folks, that does it for this week's episode. We'll be back next week with our normal format, including the post-game chart deck.
That concludes this edition of MacroVoices. Be sure to tune in each week to hear feature interviews with the brightest minds in finance and macroeconomics. MacroVoices is made possible by sponsorship from BigPictureTrading.com, the Internet's premier source of online education for traders. Please visit BigPictureTrading.com for more information. Please register your free account at MacroVoices.com. Once registered, you'll receive our free weekly Research Roundup email containing links to supporting documents from our featured guests and the very best free financial content our volunteer research team could find on the internet each week. You'll also gain access to our free listener discussion forums and research library. And the more registered users we have, the more we'll be able to recruit high-profile feature interview guests for future programs. So please register your free account today at macrovoices.com if you haven't already. You can subscribe to MacroVoices on iTunes to have MacroVoices automatically delivered to your mobile device each week free of charge. You can email questions for the program to mailbag@macrovoices.com, and we'll answer your questions on the air from time to time in our mailbag segment. MacroVoices is presented for informational and entertainment purposes only. The information presented on MacroVoices should not be construed as investment advice. Always consult a licensed investment professional before making investment decisions. The views and opinions expressed on MacroVoices are those of the participants and do not necessarily reflect those of the show's hosts or sponsors. MacroVoices, its producers, sponsors, and hosts Eric Townsend and Patrick Ceresna shall not be liable for losses resulting from investment decisions based on information or viewpoints presented on MacroVoices. MacroVoices is made possible by sponsorship from BigPictureTrading.com and by funding from Fourth Turning Capital Management, LLC. For more information, visit MacroVoices.com.